Hey folks, welcome to Wednesday, the 9th of February 2022. Another quiet day on the markets ahead. Really, we have the usual Wednesday DOEs for oil traders coming up. At half three, we had last night APIs just showing a drawdown of 2 million, which was a bit of a surprise. So, we're going to see if we can get a confirmation on this drawdown today. Headline figure is expected to come out at a build of 0.369 million. The oil market is under a little bit of downside pressure. Yesterday and today, I think it's coming into a pretty good value point for day traders and medium term traders. I think, but yeah, there's a couple of things that we'll talk about in oil now in a second, but largely quiet day on the data cards. US equities, which we're going to look at now, had a really late sort of, well, for European traders, the bid coming in just after Europe left at half four. And a couple of us staying quite late yesterday to look then to avail of some of that upside into the close. A similar bid came in on oil there, around the 88.84s level, 88 spot 84. So let's have a look at these charts. And so another market I'm looking at here actually is nat gas, but we're not going to talk about that right now. Looking at the Nasdaq, well, really studying what happened there yesterday. Let's go on the SPOOs first of all. So I was actually working on the Dow more so yesterday, but really see here half three that bid coming in. It was quite slow and kind of a little bit out of nowhere. We kind of came in and pushed, and then a little pullback right before the close, and then pushing higher into the close. So nice activity here on equities. Target 50 EMA and this little line in the sand area just between R1 and R2 on the SPOOs yet to trade. I do believe that these markets have a lot of the interest rate hikes priced in at this point. The big question is it going to be a half basis point rise or, per go, or quarter point rise per go. So, but either which way, the market is just really disregarding a lot of this risk. In the Dow in particular, there was that late bid, but let's kind of go left to right here. Nasdaq. All right, so this gap that remains here on the Nasdaq is now starting to trade out R1 up to, so that's really about 14,846s and a half up to 15,108 75s. 0.75s on the top. So you can see these exponential moving averages in the way here. 200, of course, acting as resistance above 15,038. So a nice little framework here to note though on this outstanding gap. I think we will close this gap in today's session. It's just really, is that going to be a unidirectional move? Can we hold on the gap bottom here? I think we get a push into the R1, little pullback to the bottom, and then push on up. So I know there's a lot of stuff on this chart, and I may sort of start to take off some of these moving averages here. Certainly like the 50 we can kind of get off the screen for now. So um, that's kind of the SPOOs. I like the longs, or sorry, for the Nasdaq, I like the longs. I do like the longs generally in equities at the moment today. We've kind of worked up here in the SPOOs on the daily. You can see here we kind of, as I said, we were earlier, about a week ago, we do, or 2 weeks ago really, we do need to pull up into test all of these significant moving averages as resistance, and we've had the pullback resulting here, this pullback, and now we seem to be just getting bid on up. So I think the 50 EMA is a formality on the SPOOs, trading at 45.62s right now, and then I think 46.19 and three quarters, which is the low of the day on the 10th of November last year. I think that's a nice target for this market. I'll be really interested to see, if we can get on with a crazy bid above here. That will definitely remain to be seen, and I think we're going to need a bit more data to drive that ahead of the March meeting, the FOMC meeting, and where we're going to be looking for rate hikes. So I do like the longs. I'm not too interested in kind of getting into the swing positions on the longs where we are right now, just coming up to the 50 EMA as resistance. Probably a better day today to just sit out really and wait for that CPI data tomorrow. For the Dow, Yeah, you've seen, nice hold here above this line in the sand that we got coming into the close yesterday. This is a little bit later to take a really good spin to the upside, but once it kind of broke free from the morning highs at 9 o'clock there, you can see this market really pushed above, pulled back, and got bid. So, I think we're going to hide some of these moving averages there and keep a tidy chart and really, the more significant moving averages like I think that, well, the 20 I think is something definitely to pay attention to here. Well, if we do get pullbacks down below, I think they're going to act as support here. 35 134 is on the 20 EMA. But for me, this line in the sand is the more important. That's 35 312's low to, what is this, really, 35 348's high. So I like the support that we could have in this area, pivot just below. And target is just around the R2s today on this mega downtrend. So, what is that? We'll show you on the daily. Is this compression sort of the flag here? This, well, pennant really, and a little bit over exuberant buying, fake out we had here, kind of coming through January. But I think we're going to get back up, and target is not too far above now for the Dow. All right, so that's U.S. equities. Oil's been very, very tricky yesterday, taking a couple of stops, and fourth attempt on longs, finally getting paid on this sort of push here, and that was the push, really the 5 o'clock candle, well, a 4 and 5 o'clock candle. But you see that it's holding up just about on the 80 84s, right? So something I did note yesterday in the session was that we had spent, we were looking for longs risking off of this 80 spot, 80s here below, right? See this? And so we spent about 4.5 days here just held above there, right? And so then we pop above finally last Thursday, and then run up into above 92s here, and almost actually above 93s. I think we traded just briefly. So when we come down now to test this zone here as support rather than resistance, which it was the prior week, I think it's going to take a couple of trading sessions to really be proven as good support. And so you are going to get into some nice little long opportunities here. But at some point, I do think the flushes in can be a little bit violent. But as long as this market stays over 86 80s, I think we can still look towards the big one of 107s this year. So yeah, I'm kind of sticking my neck out there, but that's all right. This is not trading advice or investment advice. This is educational purposes and analysis purposes only. So yeah, we're just trading under the 90s here, but this is really the framework of operation I have for this market now. We can actually kind of tidy up a bit of this stuff too. Um, we're just gonna, yeah, I mean, this is really the line, the sort of area that I'm looking for here for general support, right? It's 86 34s up to 88 84s. So we'll just overlay those weekly drawings again. That's oil. And gold has been having a great run in the background here. So, we have been carefully looking at this. I haven't gotten in on this myself. There was a nice opportunity yesterday to get in on the longs and just missed it as it pushed here. I think that was about, 1 o'clock handle just pushed up. And the bond's kind of steadying off there, so the yield not really getting any further above 2%. So gold making a good run out of that. So I still think the support 1809s should we fall down here, and look to target 1843s on the upside. And then, to be honest, I think it's going to be interesting to see if the sellers just want to take us back down again on gold, or they want to push for something similar to what they did back in 25th of January here. Trying to push into and above 1856s. So we'll talk about that on another session. But these levels we could see them trading over CPI tomorrow. We could see them. So Nasdaq here, just continuing with the new highs on the session, making progress in this gap fill here. So do be aware of that. And then Nat Gas. Nat Gas is a funny one, really. But I do like kind of the longs in Nat Gas for the moment. There is this macro movement now, really, that there's a de-escalation of the situation in the Ukraine, and with that, you're seeing a little bit of dissipation in buying on that gas. I mean, we had that big 12.5% spike up there last week, so we're just pulling back, testing support here of the August spike high in 2020. Here, you see that there, 4 spot 149s acting as support currently this hour. Well, actually, currently in this session, all the way from the 7 o'clock marker. So I do like a push back to the 20 EMA. And actually above the, maybe a new high in the week here, but let's see. Currently like the longs in that gas. All right, that's it for me for this session. Please do click to like and subscribe on YouTube, and you'll get notified anytime we go live. And apart from that, have a great session. And if you're going to be with me in Discord, do give me a shout out, and I'll see you then. Take care. Bye bye.